Welcome to Trial to Triumph, hosted by Caleb Johnson, the show about leaning into life's constant testing on your way to realizing your biggest blessings.
Welcome back, everyone. This is Caleb Johnson, host of From Trial to Triumph, and I'm very excited to share this story with you today and this man's experience. So, Colby Fryar, welcome to the show.
Thanks, Caleb. Super honored to be on here, and known you for a couple of years. Enjoyed meeting you and getting to know you, and just thank you so much for allowing me the opportunity. Really appreciate it.
Feelings mutual, brother, for sure. Now, Colby, can you go ahead and give our listeners just a quick background story about yourself?
Sure. Yeah. So I started out in civil engineering around 25 years ago, and worked my way up over the years, and around 2013-ish, we started dabbling in single-family properties, my wife and I, and we bought a couple of properties here in Tucson, and that was a time when you could still get a short sale, and one of them was actually a foreclosure. So, but there weren't many, and they were hard to find, and we realized we were going to have to do something different. And so after that, I had this idea that I was going to quit my job, and so I looked at all kinds of franchises and things, but we came back to real estate, and I kept my job, and looked in Alabama. We had a connection there, bought a couple of turnkeys, and then shortly after did the BRRRR strategy on a couple of properties in Huntsville area. Built a team there, learned a ton, but realized it wasn't scalable, so moved into multifamily around 2020, and been there ever since. Own over 144 doors now, and still working on it. So
great.
Primarily New Mexico, but we're looking in other markets as well.
Okay.
So,
and Colby, I've actually looked at Alabama as well. That's one market I haven't bought in yet, but we're very aggressive in pursuing properties there. So what are some fundamentals whenever you do look at a market to invest in? What are some things that you have to have before you invest there?
Yeah, one of the things we were, and it's different in multifamily now, but the big thing with the single family was looking at cash flow. And trying to buy something here for cash flow was virtually impossible, especially on single family. And so that was the big driver. And your property value versus what you can get for that cash flow is really important, because you could buy those houses pretty cheap over there, and still get that high cash flow. Multifamily's very similar to that. Those markets like that, high cash flow markets, and relatively lower values compared to what we see on the coast and even Tucson, Phoenix. I think a lot of people bank more on the appreciation here. Mm-hmm. So that was really what we were looking for.
Okay.
But to get back to your question, what we look for markets, I mean, now with multifamily, it's population growth, job growth. We look at average annual income for the submarket, and then crime. Obviously, our criteria is typically C plus, B minus, or B assets, and so I think those are some of the ones we look at. But house, what does a house cost? What's the average house price? All those kinds of things we really look at on a market to determine if we're going to invest there.
Okay. Yeah, we could look at the same thing. I actually looked at the Bureau of Labor Statistics and the forecasted job growth for the next 10 years. I put that all into a spreadsheet and found which cities were going to grow and which ones were not. And then once I found those cities that were hot, that were growing, then comparing that to my other criteria. So are they a red state, landlord-friendly laws? Some of these places are on a coast. Some cities are just really expensive, and I don't want to buy there. I'm more of a cash flow investor. But and then also getting more into the granular, like you said, Colby, with median household income, crime. You can look at the submarket, and it can take a long time to actually find a market that meets all your criteria. But I think it's that dialing that in is so important, because if you're investing capital there, hundreds of thousands of dollars, then you want to spend a couple weeks, maybe a month, diving into markets so you actually know what you're getting into.
I totally agree. Yeah, that's critical, especially with investors. It's one of the first questions they ask is what is, they want to know everything about that market and why it's a good place to invest in, and you have to, not only for the business and securing that real estate, but also being able to attract investors and what they're looking for. So that's, absolutely.
And Colby, I know you're heavily invested in the Las Cruces, New Mexico market, and I own some property there as well. And what were some of the things that really stood out to you when you first started looking to invest there?
Well, the big thing was familiarity for me, because I graduated from New Mexico State and I knew the market. Grew up about 4 hours away, 3.5 hours from Las Cruces. And I think it was a comfort level just knowing kind of the drivers there. Las Cruces isn't a really big city, but it's over 100,000 population. You have the New Mexico State there. There's a lot of, for the size of town, there's just a lot going on, a lot of jobs, great job growth, and of course Virgin Galactic is there with Branson and all that. It's got some cool things, and now they're bringing in a lot of the film, kind of like Albuquerque. They got the film industry coming in, so it does have its issues with crime. So you have to really watch where you invest, like anywhere. But yeah, we found that to be a really good market.
Yeah, we have too.
We love Las Cruces.
We have too, yeah. And Colby, you preluded to it a little bit earlier. You started in residential, smaller single families, and then scaled to apartments because of the scalability. So can you kind of dive more into just what are some of the benefits of investing in a larger apartment complex or a larger property compared to a single family?
Yeah, absolutely. I mean, for us, it was the ability to scale. And the thing that I really like the most about it is the team, the building of the team, and having people around you that can do things maybe, a lot better than you, or sometimes, quite a bit better. And you combine everybody's talents, and it allows you to do something much bigger than just one property. And that was the trouble with single families. It's all my money, right? And now we're able to bring in other people on these deals, and they help us raise the money. We bring in our money too, but it allows us to do much bigger size properties, and partner with other people that have skin in the game, have their own money in it, and we're all working towards a common goal. And that's the part that I really like about it is the team effort and just the ability to scale it. And you typically end up with a small piece, but that small piece is of a big project is worth it to me and worth it to our partners, versus single family where you've got the whole thing, but compared to that small piece, sometimes it can be, not always, but it can be smaller for sure. Smaller returns, smaller investment. And so I think there's just a lot of opportunity there.
Yeah, that's why I started investing in multifamily as well. And my first property was actually a fourplex, and I saw the scale of economy where if I have one roof, one tenant, and they move out, then that's 100% vacancy, and now I'm covering the mortgage bill which is, let's say, $1,500 for a whole month while I'm waiting for that person to move in. And so that $1,500 is my whole cash flow for that entire month. But if I own a fourplex, then I have 4 residents, and let's say I'm making $1,200 a month on cash flow, then if one person moves out and I'm getting $800 in rent, then I'm still actually making $400 if one person moves out and rents $800. So that made sense to me. And then I have one roof, 4 tenants, but now you scale into larger apartments where everything's more systematized. You have 100 units, maybe under 15 roofs. You have an on-site property manager who's leasing everything up. You have on-site staff that you're not having to bill out contractors to fix everything. And it just operates and runs a lot more like a business compared to me having to drive down and fix something myself. And that was something I didn't like in residential. Now, at the same time, I will say residential investing, I'm still a proponent of that, and I still do that. I want to be more of an opportunist compared to just limiting myself and saying, hey, I'm only an apartment guy, or I'm only a commercial guy. I still want to be an investor overall and just wise financially.
Yeah, man, that's key. And I'm the same way. We still have ours, but there are so many times where I think, why do I still own this house? I've got to, get a new tenant in there, and I have no cash flow for the next 2 or 3 months. And yeah, you're absolutely right. It just drives you crazy. I don't want to let them go, but it's one of those things that, sometimes they're tough to hang on to when you have this multifamily asset there could be problems, obviously, but if you run these properties right as a business, like you say, they cash flow really well, and you don't have to worry if one person moves out or a couple move out. You still got the cash flow coming in, covering the bills, and absolutely critical.
That's right.
That's the part I love the best too.
And Colby, whenever, you're a syndicator as well, as am I, and what are some things in other syndicators or operators that you are leery and you kind of warn limited partners on? And so I'll give an example. Is I know someone who, let's say they are talking to a passive investor that's thinking about investing in that deal, and they say, I have done 20 syndications. Now, I know them and I know their background, and they've done 19 limited partner transactions, and they've invested in one syndication as a general partner. So they're saying they have all this experience, but really they don't. They're saying they've done 20 deals and they've really done one, and they weren't even the lead on it. And so for you, what are some things that you warn investors whenever they're looking for a sponsor to work with?
Yeah, I think track record is important. How many cycles have they been through? Have they been through a full cycle on a deal or multiple deals? I think one of the big things too is just transparency. Are they honest? Do you feel like they have integrity? I think a big red flag might be if they tell you they've never had any issues on their properties and things go rosy 100% of the time. We all know that's impossible, especially running this business. There's always stuff that comes up and challenges we have to work through, and we fail sometimes, and I think figuring out what those failures are, if they're upfront about that, I think that's really key. You want to be able to trust the people you're working with. You want to know them, and that they're going to look after your best interest. The other thing is find out how responsive they are. How are they informing you periodically of what's going on? Are they sending out a monthly? We do like a monthly webinar with our investors, and even if they don't show up, I send out the recording in an email, just going through everything that we're dealing with and going through the financials, our monthly report. and that way they know what's going on, and I think that really helps things. And but you want, like a new investor would want to know that, like, are these people, do they do this quarterly, or can I get a hold of them when I want to? I think that's very important um, to know up front.
Yeah, I agree 100%. I actually just got off a call with an investor, and we had that conversation about people will say they communicate with their investors, but then once you invest, there's no communication. And something that's nice that he said is nice going into a deal is some designated times of when there's going to be communication. And Colby, I love that you do once a month. I do quarterly, wherever we send out a little 5-minute video going through the updates of the property, the big wins, the lows, and what we're working on. And then we'll send out the financial package as well. And if investors have questions on that financial package, they can absolutely call us and let us know. But I see so many operators, they will, they'll just say that they're going to do something and they don't do it. And it's hard to trust someone and actually know if they're telling the truth without actually investing in them. That's why referrals are also so good as well.
Referrals are key. Yeah, man, it's interesting. I was talking to an investor yesterday who said one of the projects, I think, that they are in, it's gone south. I believe it's in the foreclosure stage, unfortunately, but they just went, basically AWOL. They're gone. They can't contact them. They can't get a hold of them. I thought that was terrible, but it does happen, and you got to be real careful of who you're dealing with in this business, for sure.
That's right. And I want to touch on that a little bit because I also hear people say an investor will ask the sponsor, "Are you invested in the deal? Have you actually invested capital?"
Do you have
and I think it is.
Yeah.
Yeah, it is good to have some skin in the game, but at the same time, I'd say it's more important than having skin in the game is if they have a brand. Because like you said with that investor, I guarantee you that a sponsor that's gone AWOL, he doesn't have a 20-year or a 15-year record or brand that he's been building for that long. Because if he had, there's no way that he would just split, right? If someone's built up a company for 20 years and they're the face of that company and something goes sideways, I mean, they have spent so much time and money into that company, that brand alone, that's more important than, let's say, investing 50 grand or 100 grand into a deal because they have that brand.
Yeah, that's right. I think they've got to be an established business, and you gotta. That's the scary part. Some of them can really talk, so like you said, referrals. You got to find out from other people that know them, and hopefully you could find that out. And hopefully people would be upfront with you about it. But I think that's key.
Yeah. And Colby, pivoting a little bit, so you still working and having a W-2 is awesome, and I would love to hear also some challenges about being a real estate investor and owning these large assets. What are some challenges that you face while having a W-2?
Yeah, it is challenging. I have a very flexible schedule, thank God, and I work for a great organization that allows me to do what I do. Get my stuff done here at work, and then focus on the real estate. Probably the most challenging part is, meetings at times, and being able to do those things during the day, going to the properties. But again, I'm so blessed because I can literally come in early, work late, and still go out and tour properties. Go to my property in Las Cruces, make sure everything's good there, come back, and so yeah, it has worked out. But I'm kind of in the transition stage because I know, it is limiting me somewhat. So over the next few years, my plan is to transition out and do this full time, and and I think that'll really help a ton. But for right now, it's working, and just keep it going as long as we can.
Yeah, that's fair. And I think that's awesome that you have a job where you have that flexibility. I know a lot of people that they wish they could do this more than they are, but they have their job where they can't have that flexibility to go to properties or go to assets that they already own, and so they're kind of stuck. And so that's the reason they might have to invest passively in other deals.
Yeah, for sure. And I know some folks like that. Literally they might work in a kind of an open office and they can't talk on the phone. They can't get out. And they're traveling. A lot of them are traveling, and it takes up their full time. So yeah, I can definitely see that.
And Colby, talking a little bit about work-life balance, you're a very busy guy, having a job, investing in real estate, having a single-family portfolio, as well as large apartment buildings. Are there some things that you do for work-life balance where you can still spend that quality time with family and still do what you need to do in your business? And I think there's a lot of people that are kind of struggling with that might be listening to this show. So I'd love to hear if there are some things that you do to kind of help with that.
Yeah. Thanks for that. It's a great question. It is a constant challenge every day to try to balance that. There is a lot of sacrifice. There's no doubt. My wife, without her, this would not be possible, because she literally takes on so much responsibility at home with the kids and the family, and just super blessed for that. But the other thing is really planning my day, planning my week, and having everything laid out that I have to do, knowing, laying it out on a grid and saying, hey, this time I'm in a meeting, this time I'm going to be doing calls, this time I'm meeting with the brokers, and just having it all laid out, and making sure that I you don't always get it 100% right, but as much as I can, hitting those targets week in and week out, I think is a thing. And then always making sure at the end of the day, or at least some time of the day, that I have that time with family. Sometimes it's only 10 minutes, sometimes it's 30 or minutes or an hour, but I make sure to plan that in my schedule. And then the key thing for me that has helped is really focusing on 3 things for my business each day, every morning, writing those down, and then making sure that I hit those every day. That's been really helpful for me. So it kind of all fits in together as it sounds easy, but it's a struggle, and it doesn't always work out, depending on the day and the week. But as much as I can, I try to stick to that. And that's kind of really helped me.
Yeah, I know that is a challenge. And one thing that I want to pull out that you said is that sometimes you have to schedule time with family, right? Actually putting it in your calendar and silencing the phone and taking those steps to actually have that quality time with family. Because a lot of times us investors, we do this so that we can spend time with family. So there are some times when we do need to make sacrifices, but when you look at the grand scheme of things, if you keep on taking time away from your family and you're not giving them what they need, then you're defeating the purpose of even investing in real estate.
Why do this, right? What's it all for? Mm-hmm. Absolutely, I totally agree. Got to go to those games and the volleyball games, and for my daughter, and all those things that are real important. Just it's a must do. There's no compromise on that,
Absolutely. And Colby, I think we'll start winding things down, but first I just want to say thank you so much for being here. I know you're a busy guy, so I really appreciate you spending some time with us today.
Awesome, man. Yeah, it's been fun. Great questions.
And Colby, so the first question that I'll ask is, if you have a book recommendation for our listeners, what would that be?
Oh my gosh, a lot of them. One book that I've been really that I've gone back to. I've listened to it before, but I'm reading it now, very slowly. But it's one of those books that you kind of digest slowly, and you go back and you read different parts of it. Is Think and Grow Rich by Napoleon Hill. It's just an amazing book. And I would encourage anybody that's trying to pursue wealth or find a different way to read that book.
And Colby, the second question is, if people want to learn more about you and maybe learn about investing with you, where's the best place that they can do that at?
So I'm on Facebook, LinkedIn. You can just go to Colby Fryar and you should find me. I also have a website, mountainbridgecapital.com, and I do have a free ebook on there, and it talks about the 7 things that we really love about real estate and why it's such a great investment. I encourage everybody to go there. Also, Colby at mountainbridgecapital.com. That's my email handle.
Amen. Well, Colby, thank you again for being here. And to the listeners, thank you for tuning in. We'll catch you next time.
It's time to grab your victory. Find us on the web at redseacapitalgroup.com and follow us on Instagram and Facebook at Red Sea Capital Group.